Welcome to the Dental Business Guide podcast. From money to marketing to management, this podcast will help you run a better dental business.
Right.
Good evening, everyone.
Good morning, good afternoon, good evening, wherever you may be listening to this recorded webinar. My name's Aaron, and I have got, who have I got here?
Euros, your commercial finance broker.
Okay, our expert on finance. Now, today we're going to be talking all about funding a £1 million dental practice in 2026. We are coming towards the end of Jan 2026, and I know we've had interest from quite a few dentists, young, middle-aged, even some people trying to acquire a second practice, how to fund a practice in 2026, private, NHS, mixed, all these types of things. So we thought we would do a webinar. Euros' kind of knowledge and expertise dealing with the banks and lenders, and my expertise, as you can see with my grey hair, having been in this game for perhaps a bit too long, but I've got a lot of experience. So I think between his youthful energy and my grey-haired experience, we'll be able to share with you our insight and knowledge. So let's take it away, Euros, shall we?
Yeah, we'll start a presentation.
Okay.
So let's see what we have.
There we go. Let's try and get us one here. Okay, that's the presentation we've got. You can see that, I hope, everybody. Let's crack on. So, funding a £1 million dental practice in 2026. Right. So, is now a good time to buy practice, Euros?
Yes, that's the quickest answer to this.
That's the quickest answer, and you can see all the responses down there. So, interest rates are dropping. What are they at the moment, Euros? What are interest rates?
Current Bank of England rates are 3.75. Little drop from December, essentially. So it's dropped from 4%, which is only good news for everybody who's buying at the moment.
Okay. And so that's a positive if anyone wants to borrow money. This is another point that people are seeing is that we're seeing there are less practices for sale than, say, a little while ago. Okay. Demand is higher. So we kind of feel now's not the time to wait. Opportunity is that practice values, I think, will start probably rising maybe in the next year or two. Okay, over the next year or two. What's your feeling on that, Euros?
Yeah, even now we are already seeing the valuations. The usual EBITDA was multiplier times 5 at its highest. We're already seeing 6 being quite normalized. So let's not just wait. We need to take the opportunity while we have it and never sleep on an opportunity.
Sure. Okay. And then we're seeing technology and AI with transforming practices. We're involved in the AI game ourselves here at Samera, and we can see how things are going to trend practices around, which is quite exciting, perhaps daunting, but at the same time, it could make practices run more efficiently, ultimately grow the EBITDA. So that's an opportune moment. Okay. What about the private demand from patients?
Higher and
still
higher.
There out there?
Absolutely. Yeah. There's higher and higher. NHS, as we all know, has its ups and downs. So there's more and more potential for private dentistry.
Yeah. Okay. And then freehold opportunities. I think one thing we've seen over the last 2 years are more freeholds becoming available, landlords wanting to sell up. So for any budding dentist who wants to own their freehold, that is an opportunity as well to purchase as well. So definitely a good opportunity there. And then I suppose the last point is, having been in the game of owning dental practices myself with my wife, owning a practice is definitely a great way to grow your wealth over a number of years. Is it hard work? Of course it is. Okay. Everyone will be doing it otherwise. Okay. But if you've got the temperament, the aspiration and the drive, then you can probably start buy. You can take that first step to buy that first right practice and hopefully build your wealth over the long term for you and your family. So let's move on, Euros. Let's go on to some of the more interesting practical bits. Okay, so let's talk about finance. What are the key concepts? All these funny
we're
terms.
always going to be talking. Yeah, we're always going to be talking about EBITDA. So that's earnings before interest, taxes, depreciation, amortization. This is what is the true measure of profitability. The banks nor myself would really care about the net profit. because in the end of the day, it's all about the EBITDA, and you're going to hear that word being thrown around all the time. We have the valuation multiples. At the moment, associate-led, we're talking on average about 10x, owner-led 3.5 to 6x. Like I already said, the Bank of England base rate has dropped to 3.75%. And your normal practice types is NHS, mixed, or private. Everybody always asks which is the best one, but only you have the answer, to be honest. You know, why you have NHS and it's a steady, pretty much revenue. There's sometimes a lot more potential in private, and the mixed practices, the benefits of both of them.
Well, benefits of both, but also the downsides of both as well. Just to flag that, it can be okay. You could be sitting in the middle and not really appealing to either party particularly well, which I have seen, sadly. Okay, so you've got to be very careful. You've got to think about when you're running a practice or buying a practice, what kind of dentistry will I be doing? What kind of patients do I want to see? And that will help determine what type of practice you will purchase or set up. And they all, as Euros highlighted clearly, they all have their pros, but they all have their cons as well. And you just got to go in with your eyes wide open. And today's webinar is just an initial kind of idea, just to give you a better understanding, a little bit around the financial aspects. Right, so let's move on, Euros. So I want to borrow £1 million. Well, how does it work?
Well, I'll just start up with the fees that usually the banks impose as anybody else.
Okay. Right.
So we're talking about arrangement fees. It's on average, we're seeing 1.5% of the overall deal. So if we're talking £1 million, it's about £15,000 for the arrangement fee. The bank usually does offer to put that on top of the loan itself, so you can pay it off with interest over time. Broker fees on average 0% for buying existing goodwill or freehold. When we're talking about startups, which we're not going to touch a lot on this subject today, it's 2%. A lot more work from our side as well. Security debentures, those the bank will impose. On average, we're looking between £500 to £2,000, but usually on the average of £500. Valuation costs. The bank will also offer you about 3 to 4 different valuators to come and assess the goodwill and the freehold. It's mandatory, it's not an option. And we're talking between £2,500 to £5,000. People just usually choose one of the cheapest ones, to be honest. It doesn't make much of a difference from the bank side. And solicitor fees, £3,000 to £10,000. But as soon as we're talking about NHS contracts, it's on the higher end because a lot more work from solicitors.
Correct, and that fee. These are just rough
estimates.
Figures.
Exactly. Yeah, just something that you need to
higher. Yeah, they could be higher if it's a complex lease, a complex property issue. Then suddenly your fees could be racking up as well. Okay. In addition, there are other costs that you may need to consider, things like accountants' costs and things like that, which we haven't highlighted here, which we'll talk on a little bit later as well.
Mm-hmm, correct.
Okay. So what are the pathways to financing a deal, Euros? What are they? What are people looking to do? What are they actually buying or setting up? Explain this in a little bit more detail.
Yeah, so we have your startups, which is pretty much starting from scratch. It's like having another child, essentially. So it's a lot more work. A lot of people, how can I say, don't have the courage to actually do it. So you see less people there just starting up their own practice. The LTVs, interest rates are all higher. The LTVs are lower. And it's a lot more work, like I said. Goodwill and freehold, this is usually just buying your first, second, third, or 10th practice. And this is what we see normally on a day-to-day basis. Refinance, which is like in today's situation, the interest rates dropped. So you want to go back to the bank and say, actually, I want to renegotiate the deal to get a little bit of saving. And the last but not least is asset finance, when it's just you buying a microscope or any equipment that you might need for the dental practice. Or usually we use it in combination with the startups to pretty much help with the deposit amount. And that's it.
Sure. So if we look at the first 3 items, typically that type of financing is for over a long period of maybe 10, 15, 20-year periods.
Correct. Okay? Yes. Asset finance. Yeah, sorry, go ahead.
Yeah, so a refinance is typically where you're just refinancing against an existing asset already just to get a better rate, better term, better deal. And then asset finance is usually financed over maybe a 3 to 7 year period of the life of the equipment. So different ways of financing, but there's different ways to, as they say, there's different ways to skin a cat. Okay, you want to use the appropriate finance in the appropriate way for the appropriate deal. That's a really important thing to consider. So, goodwill, leasehold, key concepts. What are they, Euros?
We'll start with goodwill. Yeah, so it's the company's brand, reputation, customer base, and pretty much everything that's inside of the dental practice, excluding the freehold itself. The downside is you have to pay for the rent, and that's usually the situation. So that's why it's sometimes better just to buy the freehold and pay for the rent and own it long term. We have the lease length is on average 15 years, and it has to be of a minimum of 15 years for the banks to even consider it. Qualifications that are needed is a qualified dentist with at least 3 years experience. And very important here is the structure. It's very important that you already have a dental accountant to talk to you about the structure itself, but it can be put under a limited company, a sole trader, partnership. If we're talking about NHS contracts, usually it's put under the sole trader name as well. If you want to put it into a limited company, the pretty much CQC is more open to it, NHS is more open to it, but that might take a lot longer. So sometimes it's just better to stick it under sole trader for the time being to pretty much smooth things along.
Okay, so going back to qualifications, you highlight as the dentist. Okay, now we get inquiries from therapists or hygienists. Do any lenders lend to those types of?
Unfortunately, not at this time. It's a difficult one, especially for therapists, because there's potential in that. But at the moment, it's the bank's policies that dictate who they can lend to, and unfortunately, at the moment, it's just qualified dentists.
Okay, all right, fair enough. Is what it is, as I say.
Sad reality, yes.
Yeah, and then what are the terms?
For your first practice, we're talking usually between 90 to 100%. There are some banks.
So when you say 90, what is LTV? Maybe just explain what LTV is.
Loan to value. So essentially, it means how much the bank will borrow to you.
Lend you.
Lend you. Yes, lend. So 90%. Yeah. So 90%. That means that if you're buying £1 million, the bank will lend you £900,000. So your deposit is only 10%. They get £100,000 in this case. But we're seeing one bank that's kind of raising the how can I say, the LTV, and they might be able to offer 100%. But I wouldn't count your chickens before they hatch. First, I would rather say
a very English phrase you said from a Slovenian there, so I picked that up.
I would rather say 90% is guaranteed, 100% if the serviceability will say it's okay. But always say 90%. For your second practice, the LTVs drop a little bit, but sometimes they can remain at 90%. And then we have interest rates. On average, we're talking between 2 to 2.75 above base rate. So it's very competitive. I don't think a lot of other industries can actually touch this. Term length, like we said before, is 15 years minimum, and they will lend to that length as well. And then the only thing to touch upon with this is the financial projections. They are only needed in this case if the business is making a loss. The only time you do need financial projections, 100%, is when you're doing a startup.
Yeah. Okay. Cool.
And so this is just an example. Yeah.
So
not much to say. I think I said it before.
Yeah, 900 grand borrowing. Since it's 90%. You've got about 100 grand of your own in plus the fees, and then the repayments based on 6.5%. So that's what, 2.25 or 2.75 above base, is it?
We have to do it a little bit higher. So that's above your average, but we just do it because the banks like to see worst case scenario as well. So I want to prepare you for the worst case scenario in this case. But we're talking about 5.75 to 6% on average at the moment.
And is that the loan as well, capital as well as interest repayment? The 90?
Yes, that's everything.
In the first year, okay. And so, all right, cool, all right. So that's the typical example. So you need to be generating sufficient cash flow to be able to repay that back in the business. So, and that's when, me talking like a chartered accountant now, is you will need to have cash flow forecast to understand what your cash flow situation is, because otherwise you could be in a bit of a pickle otherwise. Okay. some key notes here you've written here. What's this?
Like I said before, the structure is extremely important. I'm no expert at this, and this is where it's very important to involve dental accountants. They can guide you through their whole process. Yeah, that's
me. I'm a dental accountant, dare I say, and I have been for way too long. But I have a great team as well, and we can advise on all that type of structure, tax, and all these types of things. Okay, so please reach out. Carry on, you're sorry.
Owner replacement, it's very important how you can replace the current owner. If it's owner-led, if it's associate-led, it's a completely different story, but you always need to put yourself in the position of the principal leaving. Then we'll have to touch upon the sales informations, aka the brochures. They're always inflated, so it's very important for you to get an independent valuation of the actual practice, and don't trust them. In the business of a seller, they will always try to sell high. It's simple as that.
Sure. So let me kind of put a really important point here. I've been working in this game for 20 odd years, okay? And the seller is always being usually supported by a seller's agent. And the seller's agent's obligation is to work on the seller's behalf to get them the best deal. So you always got to go in as a buyer with a real be skeptical, okay? Don't believe anything they're saying. No, they may be telling you the truth, but they may well not be telling the truth as well. So that's when you engage people like ourselves. And I know we're going to talk about this a little bit later, but you need to engage people who have got the experience and the eye to look at the numbers, look at the information and say, is it actually worth this? And this is the first step you may want to consider. You get a sales brochure, and then you may engage someone like us to work out, is it actually worth that price, or is it near that worth that price, or is it just being silly? And that's what we would initially do, a kind of an initial assessment of the practice to say, this is what we think is actually worth, okay? So that's the first step. And I guess you want to make sure that you're not trusting the selling agent. That's a really important point, because there's a massive conflict of interest if you're the agent is selling and then they're trying to advise you to buy it. No. Doesn't happen in big business, and it certainly shouldn't happen in this instance as well, when a lot of money is at stake for everybody.
And they will always say as well, there's like 50 other people trying to buy. Yeah. So keep that in mind.
Yeah, correct. So key concepts here: freehold and goodwill. What are
so
these?
This means you're buying the property as well. So the major difference is you don't pay rent, which also adds security and long-time stability. You own the property after you actually pay it off, which is great. Again, qualifications are the same as before. Goodwill structure remains the same as before. And then the freehold structure, usually we see it being formed under a limited company or a partnership, but more or less of the time it's limited company. But here it's very important, when we're already talking about two limited companies, one for the goodwill, one for the freehold, is then to form another company called a holding company that holds these two companies underneath. And as far as I know, it's very good for capital gains tax long term. So what I've seen from the banks, it might be a little bit more expensive to actually set up at first, and more work from the solicitor side, but long term, it might be a very good gain.
Get yourself a good accountant, basically. They're the one who should be advising on how holding structures work. And that's what we do quite often for people buying practices, buying the property in one entity, buying the business in another entity. We form a holding company at the top. In the future, you may decide to sell the practice, but you might want to retain the property. And if you sell the practice and you're selling the shares in the practice company, and the shares are owned by the holdco, no capital gains tax will be paid under certain criteria. The only challenge there is you're only going to take that money out of the holding company, but that's another situation for another day. The property company, again, you can hold that property that's charging rent, so that could be a long-term kind of retirement plan as well. So just factor that in. So lots of things to think about here around the freeholds, goodwill, and structuring this type of purchase. So again, similar to the last one, isn't it? It's over 20 years here, though, isn't it? Correct?
Similar, but for freeholds, the bank will borrow 100% on average. Rarely I see 90%. It's usually almost 100%, which means no deposit from your side. But one key thing to remember here, these are two loans, essentially. One is for the goodwill, one is for the freehold, which means twice the amount of fees. For the valuation itself, they will just increase the price a little bit because they're already, so they can just look at the property. But solicitors will increase the fees And also the arrangement fee is doubled essentially. So you have to pay arrangement fee for the goodwill and for the freehold. Interest rates are quite similar, but when we're talking about buying both at the same time, they might drop a little bit. And the term length is usually around 20 years or higher. So it gives you a little bit more time to pay off, which also drops the amount of the repayments you have to make on a monthly and yearly basis. And one thing to point out as well, which is not written here, early repayment charges. A lot of people ask about those. In dentistry, they're not really done anymore because banks understand the dentists kind of make a little bit more on average. So as soon as you have the ability to pay back, you can. There's no early repayment charges. And like I said before as well, financial projections only in the case of the businesses making a loss.
So another example here.
Yeah, pretty much similar example as before, but here we're adding another £1 million worth of freehold. So the usual situation is 90% LTV on the goodwill, 100% LTV on the freehold. So essentially another £100,000 plus fees times 2. And the loan repayments on average 175,000 in this kind of situation with the 6.5 interest rate, of course, a little bit higher than your average one.
Sure. Okay, very good. So this is some of the stuff you've mentioned already.
Of course, it's a lot of repetition. That's in my business.
Sure. But business structure, as we said, company or holding company, these things need to be discussed early on. So get in touch with ourselves, myself or Natasha or Charles or whoever, we can help you with that. Owner replacement, think about how does the business operate if you take over, what will happen to the current owner? Are they going to stay there or not? These things need to be considered. You may not have enough security to support an application. The bank might say at some point, or not have enough cash, but they might take additional security instead if you have a flat or house or something. Again, these things need to be flagged up to ourselves early on whilst we're putting a pack together for any lender. As Euros highlighted here, sales brochures are usually very inflated, so always question everything. And then here, and this is where perhaps people get a little bit confused. You have two kind of valuations going on. One is a valuation. You might approach us to say, you're my buyers, you're going to advise me on the buying side. How much is this practice worth? And we would value that practice. Fine, we will do that and we'll give you our opinion. However, let's say you get finance from the bank. The bank's willing to lend you the money. They will then say they need to appoint a separate valuer, which is a Royal Institute of Chartered Surveyor, who will underwrite the kind of value that they think the business is worth. And the bank will lend on that basis. They won't lend on what we think it's worth or what the buyer wants to pay or what the seller wants to pay. They'll base it on what the valuation agent, the RICS agent, will tell them what it's worth. Okay, so just factor that in. But remember, the onus is always on you. Okay, you are buying the practice. Caveat emptor, buyer beware. You're spending a lot of money. Okay, therefore you need to do your DD, do your due diligence properly. Get the legal due diligence, clinical due diligence, financial due diligence. Get all that done. If you're buying a practice, do not skimp on it because it will only come back to bite you if you miss something out. Okay, so be very careful. So, what about banks? Which practices do they love or hate? Euros. What do they
They're
like
not picky. Yeah, they're not picky whatsoever. As long as the practice is making a healthy EBITDA, they do not care about the rest. It's all about you and who you are as a person and how you can go in there and replace the current principal. Do you have a healthy financial background, or do you like to spend your money in the casino or a monthly trip to the Maldives? And can you manage running a dental practice? Because it's quite complex, as Aaron mentioned before. It's not as straightforward. Even CQC can be a nightmare at times. So it's all about you. And usually you already have these conversations beforehand with people like myself or Aaron. Can you effectively replace the person that's running the dental practice at the moment? Because let's say if the current principal is an implantologist and you do not possess that skill, it's not really good for you to go there and replace them, because at the same time, we're talking about another associate who can do that work. And that's another loss to the EBITDA. So you need to be ready. You need to find the perfect dental practice for yourself.
Yeah. Okay. Cool. Very good.
How long do
So
approvals? Yeah.
yeah. How long do they
Indicative
take?
terms,
If someone,
yeah, very, very quickly. Usually I get them within a day or two, but allow us a few working days from receiving all the documentation that I will need. Credit backend offer is when the bank agrees in paper that they will borrow you the money, lend you the money. So on average, it's 10 working days after the documents are received all from their side. They might need some additional documentation, so I always keep in touch during that process. Completion. This is where a lot of people think it's going to be much shorter or a couple of months, but the reality is it's between 9 months to 12 months for NHS practices and mixed practices, and 69 months for private. Why? Because NHS. Simple as that. CQC takes its time and everything takes its time. So as soon as you get the credit backend offer, you need to start calling all of these people to speed up the process. And I think one of your, quick call is going to be the solicitors as well. You need to keep pushing them to do it as effectively, as quickly as possible.
Sure. And that's why when sometimes you can skimp on a solicitor or advisors and pay less, but then they won't return your calls, and that's a headache and time consuming. So it's worth paying the right price for the right people. Trust me. Okay, someone who's been there, done that. Pay the right fee for the right people. They'll get the job done better, quicker, faster, more efficiently. So, what's all this about? The buyer's advisor. What are we talking about here, Joris?
We're talking about us. Simple as. We're going to be guiding you through the whole process. We're strictly on your side. You know, it's a lot of times I talk to people and it's where they're going to be looking for dental practices. And that's Dental Elite, that's Frank Taylor and people like that. And they offer finance as well. But you need to realize they're selling and they will be offering the finance. That's a little bit of a conflict of interest. And for us, we don't meddle with selling practices. So we're completely on your side, completely independent and focused on protecting your investment.
And I think that's a really important point, is that there is zero conflict of interest. You want someone who's acting on your behalf from the financial point of view, the borrowing point of view, the evaluating practice point of view. We do all of that, okay? And it's focused on you as an individual, not the seller. Mm-hmm. We don't care about the seller. We want to make sure you're getting the right deal for yourself. And if it's not the right deal, we'll tell you it's not the right deal very clearly. And we'll say, don't walk away, find something else. Really important to have that independent advice. So what's all this about? What do we need to do here?
So where I can help you out with is the financial applications. This is pretty much to do everything as a bank-approved form. We have that healthy relationship with all the healthcare sectors, with all the major banks. So we can help you out, set up everything, the documents. I'll put the application in for you, and I will act on your behalf to get you the best possible deal. Unfortunately, if you're trying to reach them yourself, this is a high failure rate, essentially. I think we had a boot camp a couple of months ago, and we had that conversation with a person attending, and they said that they tried for a year trying to call up the certain bank and never were able to reach the same people we were able to reach with one phone call. So it's very important to have a broker in this case. And what we can help out as well is with the financial projections. But like I said before, it's only in the case if the business is making a loss, or if you're doing a startup practice, which we're going to touch up on a different webinar.
Sure. So, yeah, let me talk about this bit aspect. So practice valuations and financial due diligence. So this is what I alluded to earlier. So practice valuations is what we would carry out, assess what the practice is worth before you actually even make an offer. That's so important. You don't want to waste your time and going down all the route of spending lots of time and money when you realize it's not actually worth that. Now, one of the key tips I would always say is get the most recent sets of accounts from the vendors. If they haven't got the most recent sets of accounts or haven't got management accounts, the first question you should be asking is, what are they hiding? Okay. That would be my point of view. And if they're giving you accounts which are 18 months, 2 years out of date, boy, oh boy, the business could be in very different shape to what you're purchasing now as it was to 18 months ago. So be very careful. Assuming you make an offer, assuming an offer is accepted, then you can then go down the route of the financial due diligence. And that's where we get involved to basically pick holes in the business, and look at the numbers and say, well, they said their salaries were 100 grand a year, but the reality is their salaries are 120 grand a year. These things matter. Trust is important. And if you start to see holes or issues within the numbers, then you've got to start thinking, what else are they hiding? Where are the problems? What else is lurking in the cupboard? Okay, so that's kind of what we would get involved in if we're going to do the financial due diligence side of things. Okay, and again, it might come out after the offer's been made, after financial due diligence has been done, we might realize it's actually not worth what you've offered. It might be worth lower, and that's an important aspect then to go and argue that case against the vendor as well. But one thing to kind of stress also is that we can get involved to help you negotiate the price with the vendor, and that's something we're getting increasingly asked to do, because we want to get you the best price, the best deal. That means we would, if they're providing a price and we do an analysis and do our workings and we think it's worth less, we will help you negotiate to get to a lower price. That's worked quite well quite recently on a few cases for us. And they've saved 15-20% off the asking price. But because we can substantiate why they should be paying less. The way it works, we take a percentage of the savings you make. If you make no savings, we get paid zero. Okay. If you make a saving, even if it's 10 quid, we'll take a percentage of that 10 quid. Okay. So these things all add up. Okay. So as Warren Buffett has always said, and you must have heard of Warren Buffett, great investor, you make your money when you buy, not when you sell. Okay. So it's so important to negotiate hard right at the outset, not right at the end. Okay. Not after the deal. It's before you buy the practice, before you buy the business. Okay. So that's the challenge of the valuation side. The buying group, Euros, we have that as well, don't we? What's that?
Oh, yeah. And this is after you actually bought your practice and are running, and now you want to start making some savings as well. So not to complicate it too much, but it's essentially a buying group. We have about 200 members at the moment, and we get discounts from suppliers such as Rights. Rights is the most important one in my opinion. I think that's what turns people's heads. But yeah, on average, we get between 6 to 10% on consumables alone. So over time, that's a lot of money saved, and that only helps your EBITDA. But it's very easy. You fill out the form on our website. I get in touch with the suppliers. They'll come back to you, and you're signed up. And then you just purchase like you normally would and enjoy the savings.
Cool. Brilliant. Okay. So where have we got to? Almost there, aren't we? Right? Oh, we've got also a boot camps coming in March. 6th of March, setting up a practice boot camp. It's a one-day event. Myself, Samera, Euros, Chris, others will be talking about how to set up a practice, but also for those buying a practice. So we cover that as well. Okay. It's kind of Smita's experience as a clinician, my experience as an accountant, Euros' experience as finance, Chris's experience as a marketing expert. We'll be sharing it in a day. It's at the Institute of Chartered Accountants in the City of London. We have some seats available. It's a small group. $299 only for the day. We'd love to see you there. And it's a great first step if you're going to get into that zone of buying or setting up a practice. It's the first thing you should probably do on your journey, I would just advise, because we've dealt with many, many people over the years, and they started their journey by coming to this event. So just bear that in mind. And then, well, that's kind of wraps it up then today. We've talked for almost 34 minutes. Thrown at you a lot of ideas about how to fund that first £1 million practice. I'm sure this webinar has probably prompted more questions rather than answers, which is absolutely fine. You're more than welcome to book a call with us on our website, samera.co.uk, with Euros for financing with me, with some other aspects. We have Calendly diaries there. By all means, book ahead. Euros,
please do. Yeah.
Last comment?
I appreciate everybody's time. Don't sleep. That's all I'm going to say. Take charge of your future today and just get it started. Honestly, you're going to regret it by not just spending the time and doing it as soon as possible. Great.
There you go. Don't sleep. Okay. That's the passing words from Euros. Work hard, keep focused, and get some support, and we can definitely help you there. Thanks very much, everybody.
All the best.
Bye-bye.
Thanks for listening in to the Dental Business Guide podcast. We welcome your feedback, and if you're enjoying it, please let your friends know too. Until the next time on the Dental Business Guide podcast.